John Woods, Head of Fixed Income Group with Citi, joins us live from Hong Kong. John, good morning and thank you for joining us. John, globally things are looking stable, emerging markets have stabilized and Asian markets are in a good frame of mind this Tuesday morning. What is your understanding? Do you think now we could stare at some more strength in foreseeable future?
I suspect not. I think that the underlying fundamentals are still very much in investors' eyes and focus. I think there's probably a bit of a calm before we have the non-farm payrolls Friday. And I suspect that the subsequent focus will be on tapering and as a consequence of that, the ongoing withdrawal of liquidity from EM back to developed markets. Obviously, the deficit economies remain very much a concern. The apparent inability or unwillingness to meaningfully address some of these problems, I think, is going to ensure that pressure remains on currency markets, on equity markets, and to an extent bonds. And for that, I think credit ratings and underlying credit quality will remain a key focus.
John, the dollar index is at a 4-week high post the strong news. US GDP growth of about 2.5%. What do you think is the market pricing in on around the Fed meet? Can we see tapering from this month itself?
I think that's a good question. Essentially, I think what the market would be most happy with would be a non-farm payrolls number of around 180,000. I think that would show that the jobs market is sufficiently robust to continue growing, so no fears there, but not so aggressive such that we would see aggressive action by the Fed. I think there's a growing sense that the quantum of tapering may not be as much as originally anticipated. I think if they came in around the 5 billion area, we would see a positive reaction in emerging markets. But I think the underlying withdrawal of liquidity cannot be escaped. And to that extent, I think pressure on EM remains.
Right. John, emerging markets, they reversed or they directionally changed the course the moment first time the Fed chairman used the word tapering. But do you think when the actual tapering will be implemented, emerging markets will start rallying?
Well, actually, EM started to underperform DM, particularly in Asia, as far back as mid-2011. So the gradual rotation from emerging markets to particularly the United States has been going for quite a while. And I can see why. You know, the earnings profile and earnings revision profile of, for example, the States is much superior to what we're seeing in Asia. And I suspect that will continue. So I don't think it's a function of sell on the rumor and buy on the fact. I think the underlying tone of earnings, of fundamentals, and frankly of technicals also remains supportive of DM for the time being.
John, good chatting with you. Appreciate you taking the time out and speaking with us.